Hello everyone, Charles here, and in this presentation I'm going to cover presentation 3 for forex trading sessions. Today we're going to cover session breakouts and how to properly trade them. As always, we must start the video with a disclaimer. Feel free to pause the video and read through the entire disclaimer, but when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. In my last presentation, I covered trading sessions overlap, the best time to trade volume, and average pit movement per session. If you didn't see that presentation yet, I would recommend checking it out before proceeding with this one. So what is a breakout? A breakout is essentially price moving outside of a defined support or resistance level, or identified range, with increased volume. Traders use breakouts to enter the market with clear entry, stop loss, and potential target range by applying support and resistance knowledge. News trading with breakout methods. Many short-term traders use breakout methods for big news releases such as FOMC and NFP. Trading sessions with breakout methods. Many traders use breakouts for daily trades between trading sessions. Long-term trading with breakout methods. Long-term traders use breakout methods on higher time frames using identified ranges during consolidation periods. They can use the ranges for pending orders and stop losses. Then apply support and resistance or supply and demand knowledge for clear take profit zones. This is one of my favorite ways to trade breakouts. I like to trade them on the daily time frame, and I'll be getting more into that in future presentations. But for now, we're just covering the base knowledge on breakouts, okay, until you build that up. So let's keep it simple for now. I've loaded a simple template that shows daily and weekly high-low lines. Many traders base their trades on entries on these values. Unfortunately, only basing your entry on this data will more than likely not be profitable over time. But by using the previous knowledge taught in the trading session lessons, you can confidently choose the best currency pairs and trading session overlaps. In this chart, I've loaded a simple daily and weekly high-low template. There are two ways to trade the daily high-low breakout strategy. Example 1. Identify the high and the low of the candles, which, with this free indicator, you can check out on MetaTrader 4. This shows the daily high and the daily low for you. Here you would draw a horizontal line at each, and you'd set pending orders at these levels. If the short is or if the low is broken, then you would go short, and if the high is broken, then you'd go long. You would set your stop loss at the opposite order. Example, a long entry stop loss would be the short entry, and vice versa. Example 2, there are many traders that like to use the same method on the daily high and daily low. However, they pull in their entries tighter, and they put them at the candle body low and the candle body high. Okay, so the instructions are the same except your entry. Your entry would be right up snug with that lowest candle body low, and down snug with that candle body high, okay? An important note, once the first pending order fills, you will want to be sure to delete the other pending order. In this example to the right, we had a break to the downside. So you would stay in that, okay? You'd want to trail your stop so that you'd get the most out of it. And you'd want to delete this pending order for the long, okay? One other note is that if neither of them fill at the end of the day, then just delete your orders and start with the next day. Remember this chart from the previous lessons? You can use the previous lessons on trading sessions to help with trading breakouts from each as well. We will cover the best trading sessions and how to properly trade them in upcoming lessons. But if you want to get a head start, you can take this chart that I made with the average pip movement for each session to give you potential target zones for each position and each session. And I'm going to start with an example here, okay? So we talked previously about the trading session overlap. Right now, excuse me, we are in EDT, or spring, summer, in the US. That's March, April to October, November. If you remember from the previous lesson, the best times in currency pairs are 3 to 5 EDT, GBP, Euro, and CHF. 8 to 11 EDT, USD, CAD, and gold. 20 to 2 EDT, JPY, AUD, and NZD. Now remember, these are the separate currencies, okay? So that could be right here, this could be AUD, JPY, NZD, JPY, AUD, NZD, okay? These are not pairs, these are just the separate that move the best, okay? So just keep that in mind. But one, you want to begin by mapping out a specific session. So go ahead and choose a session on the top currencies that you want to break out from. Okay, so choose your session, choose your currency to check out. Identify the high and the low of that trading session. Now identify the breaking point. Okay, you can identify this by using the start of the overlap. Okay, we talked about trading session overlaps in that last presentation. So the start of the overlap into the next session, best time related to that session. Okay, so example, let's say you choose the Tokyo-London session overlap. We are currently in EDT, like I said. So Tokyo is 8 to 5, the Tokyo trading session. And London is 3 to 11. Please note, Tokyo, this is 8 p.m. to 5 a.m. EDT. London is 3 a.m. to 11 a.m. EDT. And that best time that we identified previously is 3 to 5 a.m. So that breaking point would be 3. That is when that overlap starts, right here. So 8 to 5, this is already going overnight. And then at 3, London starts. Okay, so 3 is where you would set your pending orders. And those pending orders would be based on the previous high-low of the Tokyo session. So here's a little chart for you, okay? I'm sticking with the same example, okay? And this is just from the other day. The Tokyo Open to London Open. Right here to here, this blue square. Here's where Tokyo opened, and here's where the London opened. This circled candle here is that 3 a.m. candle, okay? Here's where you'd set your orders. Your long would be here, and your short would be here, okay? They'd be pending orders, okay? Now, in this example, price broke to the downside. So you would have deleted your other pending order for the long, and you'd trail your stop if you're awake at this time. If not, make sure you have your take profits in place, okay? because you'd hate to have it go in your favor and then all of a sudden come back. Okay, that does happen, especially on these lower time frames like this. These are only hour-long candles. Okay, this is H1 chart on MetaTrader 4. Okay, so just keep that in mind and trail your stops as it moves down. Base your target zones on support and resistance. Okay, in a short, obviously previous support. And we'll get more into target zones in the upcoming presentations that I have. But I wanted to give you all at least something to go by and to start practicing, look back on your charts, get a good feel on the different currencies that you are looking to trade. Okay? That's it. In my next presentation, I'll be covering the New York Session Daily Breakout Strategy. If you're interested in learning more great strategies, receiving trading alerts 24/5, joining our academy, or checking out our free trading education, please go to slicktrade.net, and we will see you there. You guys have a good one.